these guys are becoming capital intensive, investment intensive companies with the amount of money that they're raising through debt issues or Alphabet recently announcing an $85 billion equity raise. The model is changing, so it's a bit of a conundrum.
All right, welcome back inside our proactive newsroom. And joining me now is Scott Klimo. He is the Chief Investment Officer for Saturna Capital. And Scott, it's good to see you again. How are you?
I'm doing very well, thanks, Steve. Great to see you.
Yeah, you have a really interesting ETF. Maybe sort of explain to us a little bit about it and what differentiates you from other ETFs.
Sure. I mean, very briefly, the ETF is Sharia compliant. It's the Saturna Global Focused Equity ETF. Saturna is the largest manager of Islamic compliant assets in the United States, and so we started managing this ETF in Europe in 2021. The other thing that differentiates it apart from the faith-based nature is that it is actively managed. So we do not follow an index like the Dow Jones or the MSCI. We actively manage the portfolio.
And there's quite a people may not understand there's quite a few different criteria that you go through, and there's lots of things to choose from when you're looking at building this, right?
Well, there are several criteria. A lot of people think about it as being an issue of negative screening. You can't invest in alcohol or tobacco or weapons or gambling, things of that nature. And then, of course, the single biggest exclusion is that we do not invest in conventional or traditional financial activities. So if you're talking about banking or insurance, basically anything that includes interest, which is considered usury in Islamic guidelines. And so that's a fairly big chunk of the market that's taken out. But the other thing, which one could consider a negative screen, but we actually consider very much of a positive screen, is a prohibition on excessive debt. So we cannot invest in companies that have greater than 33% total debt to market capitalization. But typically, if a company is established, it's been around for a number of years, it's been able to grow its business, to perhaps make acquisitions while maintaining that low level of debt. It demonstrates that they're probably generating pretty good cash flow and they have good returns on invested capital and skilled asset allocators managing the business. And that's a flywheel that we think is really great over time.
Okay. A lot of people I interview in your type line of work talk obviously about AI. Is that something that you look at? It seems like it sort of touches everyone and every company.
Well, sure, it's impossible to avoid these days. But technology, I mean, Islamic portfolios will typically have a fairly significant exposure to technology, primarily because they're not engaged in prohibited activities, and they also generate a lot of cash flow, and as a result have very low debt ratios. One of the interesting phenomenon of late, though, is a lot of these companies, let's say things like Alphabet and Amazon and Microsoft, that have historically been considered asset light companies. If you're making software, you make it once, you print a billion copies, and there you go. But that model has really been changing. These guys are becoming capital intensive, investment intensive companies with the amount of money that they're raising through debt issues or Alphabet recently announcing an $85 billion equity raise. The model is changing, so it's a bit of a conundrum to work out how to value these companies. You can't really look at them relative to their past because they're becoming different. So that's an interesting question that we're spending a lot of time working on.
Yeah, I can imagine also that AI is becoming obviously fairly prominent here in North America and in Europe, places like that. But even outside of that, Middle East, pretty well all over the world, people are finding needs for and the use of AI and the growing part of it, especially when you get to cloud computing and things like that.
Sure, it's a global phenomenon. And in terms of the companies that are really driving that, everybody kind of focuses on the NVIDIAs and Microsofts of the world, but particularly in Asia and to a lesser extent in Europe, a lot of the, let's say, adjacent companies are also contributing to this AI revolution. The world's largest and most successful lithography maker, the company that makes the machines that makes the chips, is based in the Netherlands, ASML. The world's greatest foundry, the company that takes those machines and makes the chips themselves, is Taiwan Semiconductor. You have Samsung Electronics, which is heavily involved in memory and various chip products. And then there are even sort of more adjacent companies that we find quite interesting. In Japan, for example, there's a company called Fujikura, which is involved in making high bandwidth optical fiber cables that connect all the various, let's say you buy a whole bunch of Rubin chips from NVIDIA, they need to be connected to each other within a data center, and they provide that. And so there are a lot of companies you really wouldn't think about initially that are tremendous beneficiaries and also drivers of this AI revolution.
Yeah. Talk to me a bit about pharmaceuticals and where you're seeing them at, because I know that you do look at some of those companies as well.
Yes, I mean, similar to technology, pharmaceuticals tend to be well represented within Islamic indices because they also generate pretty significant levels of cash and typically, apart from MA activity, have fairly low debt levels as well. But for some reason, pharmaceuticals have been rather poorly performing this year. There have been exceptions. Eli Lilly, which of course is one of the giants in the weight loss and diabetes field, has continued to do well this year. But I think there's been a lot of uncertainty about various tariff regimes and issues concerning the management of the FDA. You know, the FDA commissioner recently left, maybe under a cloud. I don't know. I'm not going to make a judgment about that. But so a little bit of disarray at the FDA, and those are things that can affect the pace of approvals and just the overall, let's say, attitude of investors towards pharmaceuticals. And of course, people have been more excited to put their money in the tech stocks that have been absolutely flying. But things don't persist indefinitely. And if we look back to history in the dot-com crash, we saw that when the tech stocks rolled over, pharmaceuticals did really well. So we're okay with holding our positions and confident that it's a nice little, let's say, part of the ballast of the portfolio to even out the volatility.
And sort of to date, Scott, you're seeing some health right now, and then moving forward as well. What's sort of the? I know you can't give a complete outlook, but certainly you can sort of feel how the market's moving.
Well, the market's a little bit, I think, uncertain about how it wants to move. I mean, lately, just you would think that, oh, we've achieved some sort of agreement with Iran, but that's actually spurred a period of negative performance. So I guess it's a classic case of buy in anticipation and sell on the news. But there's still a tremendous amount of uncertainty in the Middle East. We have seen oil prices come down dramatically, which if we can nip the potential inflation risk in the bud with oil prices normalizing, that obviously sets us up for a pretty good outlook longer term. I'm certainly not going to make any predictions about what we're seeing this summer or what we're going to see this summer, but I think we're in a pretty good place in terms of the potential contributions from AI to productivity. People talk a lot about valuations, but earnings have been there. Earnings have been holding them up. So in general, we're pretty positive.
All right, we'll leave it there, Scott. Thanks so much. Good to catch up with you as always, and we look forward to our next conversation. Okay.
Thanks, Steve. Great to see you.
Yeah, great to see you as well. There's Scott Klimo, the Chief Investment Officer for Saturna Capital.